Hey there traders, this is Steve Miley, the market chartist for FX Explained in our regular weekly macro watch update for the week commencing the 21st of June 2021. More hawkish than anticipated Fed dominates markets. So let's take a look at the macroeconomic and geopolitical developments for the past week. Well, the big event was the US Federal Open Market Committee, the FOMC interest rate decision statement that we had on Wednesday last week. The FOMC dot plot chart showed at least 2 quarter-point rate increases in 2023, and this was a more hawkish tone than global financial markets had been anticipating, causing significant price action across different asset classes. So what happened? Well, we had the US dollar surge from support. We saw US yields actually correct lower in the end, initially higher but then lower, and then we also saw equities coming from new cycle and record highs correcting back lower, particularly on Friday. So let's actually look in more detail at those financial market developments. Well, the S&P 500 had made a new all-time high earlier last week, a dip after the Fed and then a rebound Thursday, but then Friday a sell-off in here. So a setback in here, but we're still seeing an underlying bullish tone. And that's been highlighted by the big tech, the NASDAQ 100 here, reflecting the big tech market, pushing to new multi-year and all-time highs here for the NASDAQ 100 just on Thursday, and then only a slight setback on Friday. US yields, as we mentioned there, initially moving higher after the Fed, but then reversing that on Thursday and lower again on Friday, and continuing a lower yield theme that's dominated through May and June. And the US dollar index benefiting from that more hawkish tone from the Fed, the US dollar surging across the board. We'd already identified the support for the US dollar from early 2021, rebounding from that support through May, June, and then accelerating higher in here over the past week. And in turn, the dollar rallying across the board. So euro dollar had a topping pattern going in. That was reinforced last week with a plunge lower in EUR USD. We saw also a plunge lower in the pound versus the dollar, the cable spot FX rate, having already confirmed a topping pattern previous on Tuesday through Wednesday. That was reinforced Thursday through Friday. And then gold in here selling off, plunging lower, having again indicated a topping pattern, which we had highlighted. The gold plunging lower in here in reaction to the stronger dollar. Now, oil hasn't really reacted to the strength in dollar, continuing to push higher, whereas copper has continued its previous move lower in here, selling off and certainly confirming a previous topping pattern. So let's take a look now, the week ahead, the week commencing the 21st of June. Well, as ever, we're watching for COVID lockdown updates, particularly in Europe and the UK, looking for further updates in here. And we're also looking for COVID-19 cases and watching out for that spread of that Delta variant, particularly in the UK and the Europe. On the central bank side, it's a busy week. We have the PBOC, the People's Bank of China, interest rate decision on Monday. And we get Jerome Powell, the head of the Fed, testifying to Congress on Tuesday. And then moving on, still on the central bank side, we get Bank of Japan meeting minutes released on Wednesday. And then Thursday brings the Bank of England interest rate decision statements and press conference. Other data throughout the week in here. So we get EU consumer confidence on Tuesday. We get market flash manufacturing service and composite data in here on Wednesday. German IFO survey Thursday. And then US GDP and durable goods orders. And the week finishes off with the Japan CPI and US PCE data. I'm going to wish you all a great trading week. Stay safe, and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.